Everybody should be worried about credit risk. Not just your credit professional, but every person in an organization, because it actually impacts everyone in the company, not just the financial side. Your commercial people. It impacts kind of the business that you can do. So I think everyone should be focused on credit risk. Remember the credit crisis that happened, it impacted everyone, even if that weren't working in banks, because the price of debt or the ability to get financing changed. Just a lot of things happen. So everyone is actually impacted by credit every day, whether they know it or not. Right now, what I'm most worried about is debt repayments that are coming due. I think they're calling for a global recession. So if the recession happens in conjunction with an election, I think it could be difficult for companies to refinance any debt maturities they have coming in 2020. But you definitely want your leadership to be thinking about all the risks in the company, not necessarily just a credit risk, but all risks related to their business. So doing a comprehensive risk assessment is a great idea for everyone within an organization. Companies need to start with their risk tolerance and then actually develop a strategy around how much risk they're willing to take. And then from there, then I would start looking at if you have more risk in the process or in the system than you actually want to take, then I'd be looking into insurance on the credit side. We all know about political risk, and when you think about it, you think about things that happen within a country. It could be currency controls or a number of things like that. But at the end of the day, political risk has the ability to impact credit risk. Credit risk rarely impacts political risk, and so it's kind of a byproduct of political risk. With uncertainty, there's more risk, and so I think we have a lot of different views right now on the political spectrum. So until we know how that's going to work out, that's going to create risk in the system, and we'll see how different companies react to that. We always talk about biases, right? Everyone thinks you're better off, and it's always someone else that has the issue. I think it's the same way when doing a risk assessment or reviewing someone's financial. You always think you're doing fine, but then you kind of discount maybe what's going on with other people. So it's important just to always do your own self-evaluation as you would evaluate everyone that you transact with. Know your portfolio, know your customers, have an understanding of your risk tolerance. I think it starts there. And then from there are a lot of tools available to you to help you mitigate the risk.